in spite of rising interest rates. Anurag now says that housing sales in the top 7 cities will create a new peak in 2022 and will exceed the 3.6 lakh units. Data from Knight Frank shows that Mumbai has seen a 35% year-on-year growth. NCR is up 21%. Bengaluru is up close to around 15%. That's the rise in Q3 of 2022. We have with us Mr. Anuj Puri, Chairman of Anurag, as well as Ghulam Zia, the Senior Executive Director at Knight Frank, who joins in. Let's come across to you first, Mr. Puri. Now we have interest rates hikes that are taking shape, and the real estate sales have been great. Do you think that we are likely to see some impact on demand from here on because of these higher interest rates?
It is interesting the way that the residential sales has continued. Certainly we thought that during the COVID times that this was largely a COVID phenomena, or there was a pent-up demand, or people were working from home, and that's why the residential sales had spiked. But, it appears that this seems to be a long-term cycle. The urge to buy residential, the social security, somewhere that roti, kapda or makan, that makan had got lost, has come back into the priority for the guys. And clearly the numbers are reflective of what has happened. Even in the Shraddh period, which is the Pitru Paksh, the inauspicious period, we saw the highest number of registrations in a decade. That has happened is. So, clearly the numbers, as you rightly said at the start, the 9 months of 2022 calendar year has already surpassed the sales of 2019. And we think by the end of 2022, it will surpass the sale of 2014, which was the previous peak that we had seen on the sales. Now, is the high interest rates going to impact the demand? Certainly. I mean, I think there will be three things that can impact this party which is going on. Clearly, if the home loan rates continue to go up and, start to touch 10%, clearly that will have both sentimentally and financially an impact on the buyers' thought of buying resi. Second, I feel is that the inflation, which will continue to eat into the savings of the people. And third is that, if there is going to be a global recession and India does get caught out, then clearly, as an economy, if we do slow down, then it will have an impact on the real estate overall and including the residential. But at this moment in time, I can tell you is that the residential demand continues to remain very strong and very stable.
Ghulam, similar question to you actually. Do you endorse this kind of optimism which Anurag's numbers are showing? Any red flags at all in terms of interest rates or inflation or global, IT jobs not being as good as one thought 1 year ago? Anything like that? Any red flags?
To start with, I would wholeheartedly support the analysis that Anuj put across. In fact, our own in calculations that we're trying to, what Anuj spoke about, the pent-up demand, we tried to quantify that. And this was pre-pandemic when the economy was doing well, shares, stock markets were doing fabulous, real estate, housing markets were dipping year after year. So we tried to do some calculations, and it clearly shows that there is almost about 500,000 units that could have been sold those days if real estate was to do its regular sales per year. And that pent-up demand is lying somewhere, and that's one thing which we are looking at coming in these days. And second thing that we are all talking about is the interest rate. As we spoke about 2012-13, interest rates were closer to 10%. Home loan rates were about 10% odd. We are still at 8.5%. So there is still quite a runway available for us to continue to enjoy this euphoria. So the transaction numbers shall continue to me over and above what Anuj spoke about. One thing which I am worried about is whenever the markets are good, the developer tend to increase the prices relentlessly. And that's my biggest worry. And that's perhaps what he spoke about, inflation. And developers play a big role in taking the prices up towards the inflationary curve and beyond the affordability. So me, the biggest concern is breaching that affordability mark. As long as we are not doing that, I believe next year, year and a half at least, we have nothing to worry about.
So when you talk about a price increase, right, Ghulam, so far in Q3, if I'm not wrong, there's been a 6% price hike across the board on an average, which is, I think, the highest we've seen in many years. Can you just break it up for us? How have the key markets done in terms of prices going up, whether it's Mumbai, Ahmedabad, Hyderabad? And do you see more price increases now over the next 6 to 12 months?
Yes, actually, 6% that you're talking about, Mumbai has seen the maximum of that. And Mumbai also, let's not forget that during the days when the markets were falling, Mumbai was bearing the brunt the most across the markets, because it is very high price market. And due to increase in cost of construction and of course the land values shooting up, had an overall impact on the margins of the developers. And most of the developers, without an exception, were worried about these costs going up. And that was reflecting in the price rise. But then, about 5-6%, which is pretty much closer to the inflationary trend that we have, that kind of a rise is possible. It's actually something which the buyers will be fine to tag along with. The problem is when we have seen it earlier, more than 10% per annum kind of a price rise continuously for years together, at least about 3 to 4 years, had taken the affordabilities completely, thrown them out of the window. And that's the concern. So about 5-6% here and there kind of a rise. And mind you, when you're talking about 6%, a few markets didn't see that kind of a rise either. Say about a Bangalore, it was not that high. Neither was Pune. In fact, Pune was one market, and of course Kolkata, where the prices were flat, if not reducing. So overall, of the top 7-8 markets, the price rise is yet not that worrisome. I would be worried if it's a more than 6-7% kind of an increase per annum, then that worry would begin.
Okay, all right. Anuj, coming back to you then, is that shift from unorganized to organized still happening? Because some of those unorganized players, they are coming up with these bigger, projects as well and new launches. Your sense?
So 100% it is happening. I'm surprised that the unorganized are starting to come back, because clearly the demand from the home buyer is only towards the organized. I mean, look at the sales for Lodha, DLF, Brigade, Shobha, Puravankara, Oberoi Realty, any of these listed guys, they have done exceptionally well. The reason for that is that the home buyer is saying is to the unorganized developer that either you complete the project. If you have completed the project, I have no problem buying your inventory. But if it is under construction, then I don't want to buy it, even if you are giving to me at a discount of 10 to 15%, because the surety that you're going to be able to deliver in these uncertain times is just not there. And hence, I'm going to gravitate towards a grade A developer. And that's where you're seeing most of the listed guys really benefiting in this market, whilst the sales are going up. But equally, through the consolidation, they are having a double benefit, because many players are also exiting this market who are not going to be able to sustain from their own funds to complete the project without the pre-sales happening.
Okay, gentlemen, we will leave it at that. Thanks a lot for joining in and talking about this sector, which is